Corn School is brought to you by BASF and Pride Seeds. Okay, Mo, we're getting closer to corn harvest. A lot of farmers are really starting to put that marketing plan into action. What are some of the variables at play here between now and Christmas that are really going to impact that corn marketing plan?
Well, I think the USDA is one big major factor. We just had a report yesterday, and it was pretty decent, pretty bullish for corn, maybe a slight bit bearish for beans and wheat. Some surprises there, but I think the USDA has said many times this year that we've drawn a line in the sand, and the minimum requirements in this 650 to 700, and they refused to take that number any lower. Yesterday was 672. The market was looking for 636 million bushels. They've destroyed demand by 740 million bushels from July till now. I think that's wishful thinking on the USDA. I think they're making assumptions about the future, weaker demand, weaker global economy. Once the actual numbers come in, I think those numbers may actually have to come up. There's also that September quarterly grain stocks report. That can tend to be a very contentious report because in the past we've tended to find more bushels in those reports. So that's going to be so watch out for that report. Depending on where prices are just before that report, you may want to do some more marketing. I think there's going to be some harvest pressure here. We're starting to see it today down about 25, some profit taking again from yesterday. There are some frost issues, frost issues from meteorologists across the United States suggesting subpar 32 degree weather, some areas 20 degree. Minnesota, Michigan, Wisconsin are some of the areas that could be affected.
Drought, now we're going to deal with freezing.
It's a weather year, 2011. Who would have thought? This continues. The market's not convinced yet because I think there's going to be some damage quality-wise, quantity-wise, but it could be limited. Soybeans still vulnerable. So I think the old resistance on corn at 7 is going to be the new support. The old resistance on beans at 14 is going to be the new support. Once we get past harvest, I think once the farmer's done selling, and the farmer really is just selling off the combine, why not? There's no need to store going forward. You know, you got some great prices. If you want to maybe play a game, play the basis game. I think the basis game could improve as these crops continue to get quite tight past harvest, though. I think there's plenty of bushels to be had here in the coming months, so they don't really need to narrow that basis until probably their best basis is really through that month of November, December, so you can maybe play that basis game at that point in time.
So what excuse is the USDA using to stifle, to bring down that demand number? The economy?
Yeah, I think it's really the economy. I mean, we got a European debt crisis we've been talking about for 2 years now. I'm really tired of it, but 98% probability now that Greece may default. Germany really is the key in all that. Germany has to be part of that game, otherwise it's game over for Europe. I think the European debt crisis is reminiscent of the 2008 US financial crisis, but I think market has factored most of that in. I mean, unless it really gets a lot worse, I think it's pretty well over. The bright spot is China. China's still doing really well. Inflation's starting to come off a bit, lending strengthening. Still growing in that 9 to 10%. The U.S. economy, teeter-totter. Canadian economy down 0.4% in the second quarter. We're tied to the United States, so I'm assuming the third quarter of the United States is also in a negative growing number. 2 consecutive quarters for a recession. I think going forward, recessions are going to be quicker. They're not going to last as long. There's just going to be more of them. So it's part of the game. Get used to it. I'm not too worried about that. I think there's a potential to grow or have a rebound in the second half, particularly as we go into 2013. We need to grow jobs in the United States, 150,000 a month. We need a better housing market. That's going to take a little bit longer to happen. But that's why they're making an assumption about the future, and I think if they're wrong, if the yields are not there, and we're not going to be able to fix this with yields, I think prices potentially, as we get in, I think the best marketing opportunity is going to be between the holidays, I call it the Santa Claus rally, right into the March planting intentions of next year, where corn's going to have to buy acres. Why? Because there's a lack of acres going into 2012. Again, 2 years in a row with a disappointing yield. We got lack of seed production. We've mentioned this before. The seed companies in the States don't have enough seed production. Some companies are at 50% of production. There's going to be a record winter wheat crop, and some of that may not be ready for the planting in North America. So I think December corn 12 is going to have to try to buy those acres. You're probably going to see between $7 to $8 along the way. Try to watch that basis, and you may end up selling corn for 12 at 7. What the producers made a mistake doing is that he sold too early in 10 because the experts were telling you the yield was going to be big, and it wasn't, and eventually the corn took off. 11 has been an easier marketing game because prices kept going higher. Some may have booked too much too early because they thought they had a big crop and all of a sudden it's not there, dryness, it's affected pollination, and maybe they're overbooked. So then they're really not in the mood of doing any 12, but your input costs are going higher. So some takeaways: make sure you do an early order on seed because you may not be able to grow the seed variety you want, number one. Yes, for real. And if they don't have enough seed, it looks like from the seed companies, we may not be able to plant 92, 93 million acres of corn next year. If that's the case, we're in trouble again if demand remains strong. Make sure you do early ties to your inputs, nitrogen, potash, 20%, all that fun stuff. Book it now, it's going higher. Soaring commodity prices will naturally take those prices higher as well. So manage your input costs because your inputs are going to be a record next year. The mistake that I think farmers are going to make is that they're lost in the past. They refuse to do anything about 12 because all the experts are telling you it's going to 9, 10, and then something happens where we fix this. And the one thing I see where we could fix this is you have a perfect growing season in 2012 where the United States comes out with an average yield of 170 and then ending stocks go from 672 back to 2 billion, and it's game over. You're going to see $4 corn. So don't make that mistake. At least book up to 50% of your crop insurance yield between that Santa Claus rally through March planting intentions of 2012 at between that 7 and 8. Manage that basis along the way, and you too are going to do very well with your marketing.
Thanks a lot, Mo. We'll talk to you again soon.
Thanks for being here. Take care.